Hi everyone, welcome back. Now I'm doing this video because some of you individuals out there may have a credit card with a high interest rate on that credit card and you have balance on that credit card and you want to get rid of that credit card. Now this lesson is how to eliminate balances on a credit card that is carrying a high interest rate. So the first method is to do a credit card surfing. Surfing means that you're going to move balance from one card to another card. It's moving it about, it's a movement, moving it all around. Surfing, yay, surfing, surfboard, yay. So you want to move that balance that has that high interest rate to another credit card that has a lower interest rate. This is also what we call balance transfer. Now, balance transfer offers comes in two ways. It can be applied to a new line of credit that you are opening up and you get that 0% or it could be 1% balance transfer for it could be 9 months, 12 months, 18 months, whatever the duration is. Or you can get a balance transfer offer to an existing card that you have and at the same maybe 0% or whatever the percent may be for a duration of time, could be 9 months, 12 months, 18 months. Okay? But one thing I must say to you is that there's always a transfer fee. That balance transfer fee sometimes is 3 to 5%. Be mindful of that because that will add up. If you are transferring, say, $5,000 from a card that you have to a new card or to another card at 5%, that 5% at the $5,000 is going to be $250. So they're charging you $250 to do that transfer. But that's fine. I just want you to be mindful of the transfer fee. All right? Now, when you get the statement, you're not going to see just the $5,000 on that statement. You're going to see $5,250 on that statement. But if it is at 0%, you're not going to see any interest added to that bill every month until that duration is up, that term is up. Now, what I would say to you is that you're to keep track and note when that term will expire. And I would say 2 weeks before the expiration date comes, decide within yourself look at the balance and decide within yourself if you are going to pay off the total balance that you have on that. And if you can't pay off the total balance, decide to transfer it to another credit card. And that's where the surfing comes into play. All right. Now, when you're doing that transfer, all right, give yourself 10 to 14 days before it expires, because that new credit card that you're going to transfer it to, you want to give that credit card company enough time for them to process the balance transfer so that it will not reflect or pass the expiration date on the old one that you have. Okay, so give that new yourself 10 to 14 days, all right, to do that balance transfer. One thing I must say to you also is that if you have an existing credit card and you're going to do the balance transfer on the existing card, please use one that does not have any balance on it. All right, so you're starting off scratch with a 0% or whatever, if it's 1% balance transfer offer on that card. The reason why I'm saying this, folks, is because if you have $1,000 on a credit card and you are taking advantage of a balance transfer offer on that same card at 0%, if that $1,000 is maintaining or is carrying an interest of, say, 15%, you're still going to be paying that 15% on that $1,000. And whatever payment that you make towards that credit card is going to go towards a 0% balance amount. Okay, so you don't want to have two different amounts on a card at two different interest rates, at 0% and a 15%. Please try not to do that. All right, try not to keep just to do a balance transfer on a card that you had nothing on there. It's just whatever you're transferring is going to be on that card. Please do that, folks. I'm telling you. All right, save yourself the headache, save yourself all that stress of still paying that 15% on that $1,000 and nothing is coming off of that. That is not being reduced monthly from any payment made to that credit card. Okay, now the second step that you can take in eliminating a credit card balance with high interest bearing rate is that you can take out a personal loan. There are companies out there that are offering personal loans, or you probably can get a personal loan from your bank, or if you are a member of a credit union, you can apply to that credit union for a personal loan to pay off your credit card that is bearing a high interest rate. Okay, but make sure that the interest that they are offering you on that personal loan is way less than the interest that you're currently carrying on that credit card that you have that you need to get rid of, or credit cards. Okay, if it's more than one cards that you have. Now the third step is to borrow money from your retirement plan. Now, if you have been working in a company for a long time and you have been contributing to a 401k plan or any other equivalent retirement investment plan, you can borrow money from that, and in essence you are paying back yourself. So if you borrow, say, $10,000 off your retirement funds to pay off your high interest bearing credit card balance that is carrying an interest of, say, 15%, usually the percentage on that loan that you're taking off from your retirement plan, sometimes it's around, say, 6.5 to 8%. You're still saving yourself a lot of interest there. All right, sometimes they only charge a one-time fee of, say, $30, so just be mindful of that. But $30 compared to paying that huge amount over duration time, you'll see that it will add up and you will save yourself some money that way. Okay, and that's only for those of you who do have a retirement plan. And look at it this way: you're borrowing money from yourself and you're paying back yourself, because if you're paid bi-weekly, they're going to take that money out for the loan payment on a bi-weekly basis before you see your net pay. Okay, and you don't have to worry, it's going to go back. You're paying back yourself. All right, so those are the three steps or three methods that you can eliminate any credit card balance that you have that is bearing a high interest rate. We all want to be stress-free. We all want to be debt-free. We all want to pay these credit card companies less in interest amount, in dollar-wise, over the duration of that life of that credit card. So please, folks, utilize one of the steps that I just laid out, or if you can use both, depending on how much credit card balance that you have to sit down and analyze what you have and take it from there. Okay, stop paying these credit card companies these huge amount of money monthly in interest alone. You will not see your credit card balance move tremendously if you keep it that way. So do the math. Let's do it, or let's play chessmate here. Let's move. All right, let's move it around. Credit card surfing, or take out a personal loan, or borrow money from your retirement plan. All right, please hit that subscribe button. Please like and share the video with others.